All right, guys, this is segment 2 of understanding our reports. We're still on the P&L. I'm going to briefly go over what we went over last time so that we have a starting base. But basically, last time we went over sales. What are sales? How do we gather sales? Where do the numbers come from? How do they reflect in QuickBooks? So if you haven't watched that already, I suggest that you, after this, you watch the first video. It'll be very informative. One thing I wanted to bring up now that we're I have this example, you'll see the word cash basis on my P&L, and then on my balance sheet you'll see accrual basis. So that is two ways of showing data. So I'll explain the differences and then why it doesn't matter in my example right now. So cash means you count something as income when you have paid for it, and same with, or when it was paid to you, and then you count an expense when you've paid for it. Accrual means you count something as an income when you've earned it, not necessarily when you paid for it. And the same with expense, when you incurred the expense, not when you paid for it. So that is the difference between those two reports. Well, the reason why it doesn't matter in this particular client is because the data was entered on a cash basis. So even if we run the reports for accrual, it won't make a difference at all because it was entered on a cash basis. So in case you're wondering what that means, now you know the difference between cash and accrual. Now, if we were entering invoices or we were entering bills and then paying them at a later date in QuickBooks, then yes, it would affect things. But that's not the case. Data is only being entered after it's already been paid. So it is only in a cash basis, even if we say it's accrual basis. So I just didn't want you guys to be thrown off, and I know that that's confusing because it's like accounting lingo. All right, so we are still on the P&L. So we are going to go over cost of goods sold is the next section. What is cost of goods sold? For boutiques, cost of goods sold is pretty straightforward. The definition of cost of goods sold is things I had to buy in order to make money. So let me give you some other industries so that things can make a little more clear sense to you. So a cost of goods sold for Walmart, for instance, is what all the items they have on the shelves. They had to buy from their supplier, pay for it, and then put it on the shelf. So that's their cost of sales. For my business, when I pay my team members, that's my cost of service, which is cost of goods sold, but we would just change service to make it make more sense. For a handyman, when he or she goes to Lowe's, that would be job materials. If I was a landscaper, it would be not only, soil and flowers, but it would also be my labor, the people on staff. So then I'd have to divide my labor costs between people who directly go into me making money and indirectly, like my office people, my invoicing, my accountants, my phone answerers, whatnot. So you first have to analyze your business and say, what do I pay for that directly goes into me selling? So we have broken ours down. So I will explain. First of all, job supplies. So job supplies are items that you buy in order to sell your stuff. So let me give you examples. You have tags, tissue paper, boxes, bags, hangers, even cheap racks you could put there. I know it's kind of weird putting racks there because you're like, well, it's a permanent fixture, but it also costs $10. So anything low cost. Sometimes ladies will defer decoration. They'll separate decoration job supplies. That's actually up to you. Because I know that you guys spend a lot of time, money, and effort making your boutiques, especially for brick and mortar, very pretty and appealing. And that can cost some money. And a lot of you hit up, what's it called? Home Goods and Hobby Lobby to buy these cute things. So it's up to you if you want to have them separated with decor and furnishings. It's still an expense account. It's not an asset because even though these are permanent items, if they cost under $500, you're not going to depreciate them. You're going to want to expense them. So, so job materials are tags, tissue paper, tape, labels, anything that goes into you directly selling that item. I'm trying to think of any other good examples. So that's probably it. Okay. So the next would be merchant account fees. Now, sometimes I get pushback from people, but if you think about it, you have to pay these fees in order to make money. So that's why we stick merchant account fees. So like I said before, you have your Shopify. Every sales channel is going to have its own fee in some way, shape, or form. So you have to make sure you're capturing them correctly. So you have your PayPal, Sezzle, software, or Shopify. And and one thing I will point out that we don't include software fees in the Shopify fees because you would pay that regardless if you had a sale. So a lot of them cost, $149 a month or $99 a month. We put that under software costs. So that's just a little insider note that you don't have to include that. This is strictly the fees that come right out of Shopify. And mind you, we do an adjustment every month, and I'll explain this. So because Shopify, when it hits your bank account, it can include lots of things. So it can include, obviously, merchant account fees. It includes software. It can include, well, we combine software, subscription software and apps together. And it also includes returns sometimes. So if you have a day where you have more returns than you have sales, it'll come out of your bank account and look just like everything else. So what we have as an internal process is every Shopify fee that hits the bank, we have it hit shipping costs. And then part of our internal control, like I said in the last video about how we do the monthly entry and use deposits in transit, this is also one of those time-saving methods that will make you less crazy. So we run a report in Shopify that tells us all the different fees, the breakdown. So instead of us breaking down every little deduction and taking hours to do that, we just put them all into shipping. Then right here, if you look right here, we're pulling debiting an expense makes the expense go up. So we're debiting software expense and we're crediting shipping. So we're saying, hey, of all the deductions that hit shipping costs, I'm taking 79 out and I'm putting it into software costs. So that explains that top one. The second one is merchant account fees. So Shopify is one of those beautiful platforms that takes their money out on the front end. So we have to be able to capture it, because if we didn't do this step, your deposits in transit would go up and up and up and up and up forever. So even in this 1 year alone, this business had $3,900 in fees that they paid just to Shopify. So if we didn't go through and make these adjustments, that it would just be saying deposit in transit, and basically it would be overstating your net income because you're not getting credit for the cost of the merchant account fees. So this is us accounting for it. So this is us raising the merchant account fees and lowering deposit in transit, saying, hey, this money has actually already been received and paid out to Shopify for merchant account fees. So as you can see, we have one per month. We always did the last day of the month, but you can tell that we do it for every single platform. It looks like comments sold. We just do the exact charge. I think we have to make an adjustment for some people with comments sold. When it comes to their sales tax, that does have to be adjusted, and I'll go over that later when we hit the balance sheet. PayPal, we just enter one lump sum check every month, And I'll probably have my own video or a good portion of one video just for PayPal and how to deal with PayPal, because PayPal is also can be really tricky. You have to treat it just like a bank account. But there is an easy way to make it so it doesn't drive you crazy. So we just enter one lump sum entry every month for the amount of fees. We just write a check right out of PayPal bank account. That's on a financial summary out of PayPal, and you can get that data off of that. So we enter one entry for there. Sezzle, we do an adjustment. Same thing, they take their money out on the front end. All right, so I've hit all those. So if we didn't make these adjustments, obviously the 5,000 is pretty standard because that's actual checks. But we would have upwards of $6,000 just sitting in deposit in transit, unaccounted for, $6,000 worth of expense. So it is very important that you guys are recording the fees. You're actually going in there and not forgetting to do that, because it's very important. You will overstate your net income and therefore overpay on income tax. Some of you might be thinking, Lindsey, well, if I just record deposits, then it already deducts it for me. Well, when you get a 1099K from Shopify, they're not going to include their fees. They're going to put the gross amount, not the net amount. So your CPA will likely, if you give them your 1099K, will pay taxes based off of the 1099K and not your P&L. So keep that in mind. You do have to get credit for it. Okay, I'm going to skip really quick. Purchase for resale and do that last. Shipping costs. Like I said, we put all Shopify here and we make an adjustment sucking out the data. And then obviously USPS is obvious. So that's where we put outgoing shipping. Okay, so the next thing we're going to hit for the next 5 or so minutes is purchases for resale. Now, I have a whole video that I did about this for the Boutique Hub, but I'm going to reiterate it here because it's so important. Purchases for resale is stuff that you buy to resell. We believe at HarQuin Bookkeeping that it's very important to put every purchase here into this account. So you might be thinking to yourself, Lindsey, it does not count as an expense until I sell it. And you're correct. But the reason I want you to put it here is because that way we can look through and see if things are coded correctly. If you put it on the balance sheet, you're not going to be able to look at your P&L detail and make sure things are coded correctly. Sometimes when you buy from a vendor, it's inventory. Sometimes you buy from a vendor, it's job supplies. You can buy lots of stuff from vendors. So we want you to be able to go to one report, the P&L detail, and see, hey, is this coded right? I will briefly show you that, but we will be going into it in more detail later. Let me move my face. Okay. P&L detail, let's say last fiscal year. Let's look down here. So this is what accountants look at to see if things are coded correctly. So when you go to your purchase for resale, you want to be able to just look right here and say, yep, that's all classified right. You're not going to want to have to go to your balance sheet over here and see if things are coded right. That's 2 steps. Most people won't do 2 steps for anything. So you want to cater to the fact you're a human being who runs a business, who probably has a family, a lot going on. Let's just put it on one report. That's one reason why you definitely want to do that. Second reason is we want you to make sure you have a process into which you can pull your on-hand inventory every month. We would rather you put all of your expense on the P&L and make an adjustment for the balance sheet and say every month, this is how much I have, and here's what the adjustment looks like. So for January, looks like this boutique ended at this number, but then made an adjustment and lowered it down. So as of January 31st, this boutique only had $21,000. So $3,000 that was originally an asset has now turned into an expense. So we want you to make monthly adjustments to make the balance sheet match reality instead of putting every transaction on the balance sheet. Now, I've heard it argued both ways, but I will tell you, if you do it either way, you're going to get the same result. However, there is a chance that you, because you're a human being, or whoever's doing your inventory is a human being, they will miss the cost of something, and it won't be in your numbers won't be right. Or something will have been, what do you call that? Damaged, stolen, and you're still including it in your inventory number. If you're just sucking out cost of goods sold the other direction, like you're putting everything into the balance sheet and then you're sucking it out later. I'd rather err on the side of what I know is right and expense something on accident instead of not expense it on accident. So I hope that makes sense. I know it's a little tricky, but if it's on your balance sheet, you're not getting credit for it on your net income. So it is very important that you do this every single month. I'll show you what it looks like for 2019. If like how big of a swing getting your net doing inventory only once a year, how bad it would hurt to find out that you had so much inventory. So let me take the inventory adjustment for 2019 and move it one day. So let me so watch this net income. So if you only do this big adjustment once a year, your net income looks like, oh, wow, $3,000. I didn't make a whole lot of money this year. Sweet. I won't owe any taxes. But then you go ahead and do your physical count and you're like, okay, I have $20,000 in inventory. Well, that's an expense that you originally had on your P&L. Now you're taking it off your P&L and put it on your balance sheet. All of a sudden, your taxable income just went from $3,600 to $24,000. That's at least at least one tax bracket, maybe even two, depending on your personal situation. So because that's so important, you need to make this adjustment every month instead of once a year. I would say out of the over 150 boutiques we have as clients, I would say the majority of them took a physical count on 1/1/20, January 1st, 2020, and told us their number. Look at that big swing. That's a $20,000 swing on your net income that you weren't even prepared for. So I suggest that you make this adjustment every single month to make your inventory match every single month, so that even in October, November, you can be with your CPA, strategizing on how to save money. Hey, is it time for me to switch to an S corp? Should I be paying myself more? You would know reality. It's not going to sneak up on you. This is a sneak up on you situation. You have no time to prepare. You find out in January that the previous year, all of a sudden you had a net income that you had to claim. That's not a good situation, especially if you have a lot of inventory on hand at the end of the year. So we suggest you do this adjustment every month. You're sucking out of purchases for resale and you're putting it onto the balance sheet and making the balance sheet only match what really was on hand every month. So what's that look like? That looks like you putting the cost of your items into Shopify. Now there are fancier add-ons like Delirious Profit and stuff like that. We suggest that you, at minimum, if you use Shopify, please put the cost of your item in so it can be exported at the end of every month, and it'll tell you, as of today, you have X amount of dollars in inventory. Then you make that adjustment to pull off the P&L and to make the balance sheet match. So here's an example. I know that kind of sounds tricky. So what if I pretend this is as of today with these numbers right here. So I haven't entered my inventory adjustment yet, and I found out that I have $22,417.78 right here, but I only have $22,000. So what I would do is I would lower inventory asset by $3,000 and raise purchases for resale. Then you save the adjustment, and then you look at your balance sheet to see if it went the right way. You don't necessarily have to know debits and credit. I know that seems intimidating because you think debits are minus and credits are plus, but that is not necessarily how it works in the accounting world. Debit and credit are Latin for left and right. So I don't want to confuse you, but when you make the adjustment, do what you think is right, push save, and go check the balance sheet for that day and see if it did what you were wanting it to do. If it didn't, you might have got on the wrong direction. You just switch the numbers around, try it again, and see if you got the right answer. But that is what we suggest to ensure things are going on a monthly basis. You have a true snapshot of reality. And I know I'm going over, but I'm going to make one more point, hopefully quickly, but this is just really important. If you're a HarQuin client or not, I want to show you something that matters. Let's see here. So let's look at purchases for resale. Let's just take any of these. Okay, this transaction right here. This most likely includes inbound shipping. I'm sure all of you would agree to that. It's, I don't want to say like hell on earth, but it'd be like really close, like hours and hours of work to go to every single one of these transactions, because January is a slow month. So just like, oh, Lindsey, that's not bad. Wait until November and December. You know, there's 12 times more. And smaller boutiques don't normally have like $1,300 to buy inventory all at once. So keep that in mind. This is a slow month for this boutique, okay? So let's take this in mind right here. This definitely includes shipping. So instead of going through every little paper receipt you have, and okay, there it is, and then coming in here and breaking it down, which should take you a few hours per month, that you most likely don't have. I can almost guarantee it. I could bet money on it. You don't have these kind of hours. And you don't want to pay me to do it. We have a really easy solution. So if you're a client or not, we have a really easy workaround. So if you're a HarQuin client, you have been given a Google Sheet link for your suspense. If you don't have HarQuin as your bookkeeper, I suggest you create a Google Sheet. As you're entering every single item into your Shopify, because you're already going to be entering the data anyway, you're going to say, I got 6 of this garment and this is the cost. Do not include the cost of shipping within that garment. You might be arguing with me and saying, Lindsey, but you don't understand. That's a cost to me when I'm buying it. And I agree. If it wasn't for these next 2 points I'm about to make, I would totally agree. Go ahead and include your shipping costs, dividing it between the total amount of garments. 2 things you're not thinking of. First, that amount will be included on your inventory on hand. So now you've just bumped your $5 garment to a $6 or $7 garment. So when you don't sell that garment, there's just for that one garment, there's $1 to $2 right there sitting in your inventory asset, which is an expense, but you have coded it as an asset. That's a problem. You want to get that write-off. Second issue is, if you ever want to start a wholesale account, say UPS, you need to know how much your inbound shipping costs are. So what we suggest, as you're entering the cost of that item in a Shopify or whatever point of sale you use, enter the true cost of the garment, and then while you have that invoice in front of you, go to your Google Sheet and enter an amount. Enter an amount for your inbound shipping. Date, vendor, amount. That's it. And you don't even technically have to do that if you don't want to. The only reason I'm saying to put the vendor is in case you ever have to go back to verify something. What we suggest you do is you go every month and enter an adjustment. So you go back and this is what the adjustment would look like. So you'd open up a general journal entry. You can obviously do this in QuickBooks Online. We've already been there, done that. So say I'm doing one for January 31st, 2020. So I'm, let's see if I create it. Inbound shipping. So say I spent $525 on inbound shipping for the month of January. So I'm going to debit that expense, and I'm going to credit purchases for resale. This is me sucking the cost out of purchases for resale and giving it to inbound shipping, which is the right thing to do. Because right now that cost is that true cost is sitting in your purchase for resale. This is the easiest, fastest way that we have found. Literally it took seconds to do. If you have a bookkeeper or a HarQuin's your bookkeeper, it would take them seconds to make this adjustment, and you won't be driving yourself crazy. And the good thing about the Google Sheet, if you have someone helping you entering the cost into your point of sale, you can give them access. You can give anyone access. So, and it obviously it doesn't have to be perfect. It's not the end of the world if something was missed, because you're still getting a write-off. It's just sitting in purchase for resale instead of inbound shipping costs. So I just want to keep that in mind. That it is important. I understand though that you want to know your true cost. So what some people do is they'll put the true cost of the garment in there and then say add $1 to $2. You know, everyone has a rule of thumb on, you know, tissue paper packaging, inbound shipping, you know, the true cost of a garment. So if you have to go destash them or whatever you guys say, destash. No one's ever said it to me out loud. So destash, I've only seen it written down. But if you ever have to resell it to another boutique, then, okay, you're like, okay, there's 10 of them, and I know my cost to get them here was $2 per garment, so that's $20 extra. You have to make sure that you incorporate that into your cost when you're reselling it to another, you know, wholesale to another boutique. So I hope I've given you, I almost doubled the amount of time. I'm so sorry, but I just feel like this stuff is really important. And again, if you're not a HarQuin, current HarQuin client, and you want to learn more about being a HarQuin client, please go to boutiquebookkeeping.co and you can get an estimate customized to your business. And if you need help with 2019 or any prior year data, we can still help you with that. We can give you a pretty big discount to get that caught up for you. So we look forward to helping you, and we will talk to you guys soon. Take care.